Hello and welcome to BloombergQuint, the bottom line. I'm Menaka Doshi and I have with me the MD and CEO of TCS, N. Chandrasekharan. Chandra, thank you very much. I understand this is your first non-TCS social media live. You're live on Facebook, you're live on Periscope. This is the first time you're live on social media, is it?
Outside TCS, yes.
Outside TCS. Yeah. Well, TCS is a universe of its own. Interesting quarter. We're here to talk about your earnings for the first quarter of this financial year. You know, I was going through some of the comments that you made in the previous quarter, and at that point you had said that most of the major headwinds are behind us. And given that since then we've seen two very big developments in the world, we've seen Brexit happen, we've seen, I think Japan acknowledging now that large parts of Abenomics is not working. And also, of course, we continue to be in the shadow of a slowdown in China. Would you want to reconsider that comment? Most of the headwinds are behind you?
I think what I meant when I said that most of the headwinds are gone, we had reported to the market serious headwinds in telecom and energy from an industry perspective, and Latin America and Japan from a market perspective, and Diligenta from a business perspective. And I had said that most of these are turning around, and quite rightly so, because telecom and energy have posted good results.
Sure. And
Diligenta and Latin America at least have not degrowing. They're flattish this quarter. Obviously we have to get to a decent growth rate, but Japan continues to be degrowing, and considering the kind of client profile we have and the footprint that we have, I hope that it will bottom out sometime this year. That's Japan. Our hope. That's our hope.
You know, I was just looking at the news yesterday, and I think the Japanese government has halved its GDP growth for this year, which is 2016, from the earlier projected 1.7% to 0.9%. Now, when you have an economy that's not doing very well, it can never make for a great context for a business to do well. So in Japan over the last year or two, you were facing transition issuos which you resolved after the acquisition, but it doesn't look like growth's going to come back.
We'll see. So first of all, our point in Japan is going to be, we're going to look for flattish, not degrowth.
Yeah, well, okay, but are you sure that you'll be able to stem the degrowth? Not because you all are doing anything wrong probably, but because the environment is just not conducive.
Well, I think sometime this year, because of the extent of degrowth we have seen for the last so many quarters, I think I can't put whether it's a Q2, Q3 or whatever it is.
Sure.
But I do expect that based on what we hear from clients and what we have seen in terms of our business operation, sometime later this year we should see some kind of stability, if not growth. Then from there we got to look for growth.
Okay. You know, you've spoken extensively about how it's so difficult to try and estimate the impact of Brexit.
Yeah.
And of course, every business leader over the last few weeks has been saying that, saying, look, we don't know till the actual process of separation doesn't happen, the contours of separation, how Britain goes about signing trade agreements with the rest of the world. It's very difficult to gauge the impact of business. But I'm still going to try and understand just a basic structure. From what I get, the business that you do in UK, most of it, not all of it, but most of it is inward bound, as in it sort of supplies to UK based customers, and actually your business for Europe is located outside of the UK. Is that the correct way to put it? Can you explain the structure of how you service Europe?
When you look at business structure, you've got to look at two perspectives.
Sure.
One is the client perspective and another one is the delivery perspective. If you look at the customer perspective, we work with three types of customers. Across industries, three types of customers. There are customers who are national customers, customers who are global customers who have got a UK business, and there are European customers who operate in UK. And similarly, the UK customers who operate in Europe. That's the other side of the customers.
Okay, so I'm so sorry to interrupt you, but let me try and explain my question. What I was trying to understand is, in this separation of UK from EU, right?
Well, I'm coming to that.
Okay, so
that
because there are a lot of
part.
Tariff changes
that is
will
the
happen,
second point. That's the second point.
Businesses will have to sort of redo the way they do business. So I'm just trying to understand what the impact will be on the TCS structure.
From the second perspective is the delivery perspective. So we have a global delivery model, and wherever we have a local delivery centers, it is primarily with respect to that market. So UK, if we have something, it's for additional
the UK
resources in
market.
UK.
Okay.
Similarly in Germany for additional resources in Germany. But we have global delivery center in Eastern Europe, in Hungary for example.
Okay.
That serves globally all customers. Now, I also said earlier that when we say Brexit, we don't understand. One way to look at it is that what will be the challenges because of Brexit.
Yeah.
And also what will be the opportunity because of Brexit.
Agreed. I'm not saying no.
So when we say challenges, the challenges can be of two kinds.
Okay.
One is what happens because of this uncertainty. Are customers going to switch on to a wait and watch mode? So this is a change program that I was going to do. I have already budgeted, I have planned it, but do I spend it now or do I wait?
Yeah. So
Because
the uncertainty and maybe then therefore the deferral in spend.
Yeah, that is the first portion of it. The second portion is what happens because of the rule changes. That is, that's the point you were highlighting, which is do we have to separate systems? Do we have to? So that will translate into a number of opportunities. So we need to wait and see how it plays out and how long it takes.
But on the first front, you said as yet you weren't seeing any clients say pull back at least on spends and say because of the uncertainty we're right now freezing, let's say, budgets or freezing spends, and we'll talk about this maybe.
So far I have not heard that, as I said, but it's too early days because, for example, it happened what, 20 days ago, 15 days, hardly 20 days.
Yeah, exactly.
And also in the last 20 days,
there's been so much change.
So much change, and in fact we have a new Prime Minister which we didn't expect will happen.
Absolutely. Yeah, this is actually, I wanted to use both Japan and Brexit and China, you know, and maybe some comments. I was talking to Rucha Sharma a few weeks ago and he was talking about how we've entered into a phase of very low growth in the world, right? And that's why the first question when I asked you, when you said the major headwinds are behind you, maybe the specific headwinds that your specific business verticals were facing are behind you. But the fact is that the growth pickup that most business leaders were looking forward to just doesn't seem to come. I mean, if it were coming, we'd see a Fed rate hike. If it were coming, we wouldn't see more quantitative easing by the ECB. The BOE has spoken of stepping in, you know, to try and cover the Brexit issue. So I'm just saying, has it gotten that much more tougher? And therefore, when we look at your growth numbers, should we keep in mind that the next 5-7 years are going to be very tough for global businesses?
See, I think all your statements about the macro are absolutely right. Absolutely right, spot on. I think there are several issues. It's not only about Brexit. As you said, China is going to take a long time from anybody's commentary. Japan is where it is today. As you said, they are downgrading their growth rates, and most of the Western markets are like that. And even in the original BRICS, nobody talks about BRICS now. I think we are only talking about India, to be very frank, in terms of growth trajectory. And all other markets continue to face challenges. So I think the global growth rates are something that we've got to watch out for, and rather watch out for meaning we have to take into account. It is a reality that there is no momentum in many parts of the world. But at the same time, also we need to see from a technology perspective, there are, see, it's kind of how do you marry the macro and what is happening in the technological world.
Is there any specific you can give us on how, let's say, TCS is adapting to this new era of slow growth?
The only thing is I stay close to customers.
That's it. Okay, fine, fair. I mean, and then, you know, Okay, I think when you talk about the global macro and you keep that in context, maybe that explains to some part what we are seeing in your numbers. It's been a good quarter, undoubtedly, right? You've done a profit beat. I think everybody's very happy with that. But if I look at some of your numbers over, let's say, the last couple of quarters only, there is a clear sign that the world isn't picking up as much as you would have liked it to. So for instance, you know, your constant currency growth 3.1 versus same quarter last year 3.5. Your volume growth 3.4% versus same quarter last year 4.8. You know, your margins are now below your earlier stated intended band of 26 to 28%, which I know every time I've spoken to Rajesh and you in the last 3 years, you know, you all have been very clear that that's the band we'd like to keep our margins in. So how much would you attribute to this new normal of slow growth? How much would you attribute to specific headwinds? And do you expect that the numbers here on in the subsequent quarters will continue to be less?
I think it depends on which perspective you take, Menaka. I think if you look at, sometimes you take a year-on-year perspective, sometimes you take a sequential perspective. But to me, if you see the US dollar growth rate of TCS, if you plot it, the growth rate on a year on, since you talked about year on year, it was like this, and it's been like this last 2 quarters.
Just the only reason I spoke year on year is because Q3 and Q4 are seasonally weak quarters for you, so I didn't want to compare Q4 to Q1.
Fair enough. The point I'm making is that the year on year growth rate was continuing to dip, and the last 2 quarters it has picked up, which is a good trend for me. Which is otherwise it was just going down for multiple quarters, every quarter after quarter, and we had a huge US dollar growth drop last year because of the cross currency. I mean, all time close to 5%, never happened to us in our history. So given that, we'll have to see how the currency plays a part. That's something that we're going to watch.
Okay, we have Rajesh joining us, and while he sits down and gets mic'd up and all of that, I'm going to ask you one more question on pricing pressure. You said something very interesting in the media conference. I mean, look, your business and every business always faces competitive and pricing pressures. But you said that we are expecting with the pickup in digital consulting and automation, pricing will improve. Can you elaborate a little bit more on that? I actually wrote it down exactly the way you said it. I promise you I wrote it down exactly the way you said it.
I will look to see pricing improvement. That's exactly what I said. Okay. The reason I said that is, if you look at the last few years, and we have been in a situation of pricing pressure being asked as a question all the time.
Right.
But to our credit, we have been able to be disciplined to maintain the pricing overall on a year-to-year perspective for so many years now. For the last 3-4 years, every year there has been a lot of pressure, but generally we have been able to translate the volume into growth. We have not seen an uptick, which we used to see before. We used to have, if you have a growth of let's say X%, at least a small portion of it used to come in pricing. But I think the kind of technologies and the kind of engagements which are transformative in nature as they pick momentum, the kind of skills that we deploy, I feel that we should be able to secure some pricing.
By how much?
I will look to see. I mean, for me to start, any uptick I get is in the right direction. So I have not factored in pricing related growth, but in my opinion, we have got to.
So you're saying in this really uncertain world, which we spent the first 10 minutes talking about, you're going to maintain volume growth, if not improve it, and you're hoping that you can improve pricing.
See, I'm not saying you always translate it into FY17 perspective. I don't translate.
No, I'm saying in the quarters to come. I'm saying given that we've that's fine. In the quarters to come, certainly. I'm not suggesting it will happen next quarter, the quarter two. But you're saying that you will be able to maintain volume growth and improve pricing.
I'm not saying maintain volume growth. All I am saying is that we have been able to maintain the pricing. That I am saying. We have been able to maintain the pricing, and we see that.
Okay, we have Rajesh Gopinathan, the Group CFO of TCS, joining us. And Rajesh, look, you're going to have to explain to me, because I've spent 3 years listening to you say 26 to 28%, 2 years I think at least, 26 to 28%. Every time I've asked you about a margin change, you said our stated band is 26 to 28%. You're at 25% and a little bit more than that at this point in time. So explain to me why you're below your stated band and how long it's going to take you to get back into that. And I know, Chandra, you have an analyst meet to go to, but I have one more last question for you. So we'll listen into this.
So we were tracking on that 26 to 28 band throughout, as you said, over the last many years, and we exited last year at 26, right? And at that time we had said that it's on the lower end of the margin band, and we'll have to see. See, Q1 wage pressures is a part of our business. It's cyclic.
It's not the first Q1 you've handled.
It's not the first Q1, but we have gotten into Q1 at the lowest end of our stated band. So I'm very happy with the way Q1 has turned out, because that's the whole point of having a margin band and having a target. So we have delivered 120 basis point improvement on a like-to-like basis in Q1, and that's a trajectory. And and as you have said, the band is 26 to 28, and we'll work our way towards that.
It was the only, y'all don't give any guidance. It was the only firm indication y'all have given any of us on where you expect margins to come in for the last 2 years. And that it hasn't come in there, therefore, is a question I persist in asking you, right?
No. Let's clarify that. We said 26 to 28, and if you look at FY16, we exited, even in Q4, we exited at 26.1. Okay. So our ability to deliver and bring in our margin within the band that we spoke about has always been very high. When we exited Q4, I specifically said that we are exiting at the lowest end of this margin band, and we are going to face pressures as we go into Q1. In fact, in the analyst call, I said that it's going to be a year when we will have to earn our salaries. That was the comment. And I do think that Q1 has been a fairly decent set of 90 days, and we will continue to work
So
towards it.
you earned your salary this time
I
around?
hope so. I definitely do think so, yeah.
Okay. I have one last question for Chandra before he rushes off to the analyst meet. Rajesh, so bear with me. You've had a good set of numbers for India this time round. India has always been very volatile for you, so I'm not going to ask you the question on whether it's sustainable. I do want to try and get a sense of both the color of deals in India and really how this plays into your digital sort of strategy. Your percentage of to revenue of digital has grown to 15.9. So every quarter the piece of the digital pie is growing bigger and bigger. Are the deals getting better? Are the margins improving on that? Where are you in the digital growth trajectory? And also a little bit on India.
So two questions on India. I'm happy with the 8.4%, 5%, whatever is the number, growth. Also with the business mix. Most of the growth has come from corporates. And I'm happy to say that we are deeply involved in very strong digital initiatives in India.
Fintech?
With corporates.
Fintech?
With corporates.
With corporates. But fintech, is that playing out in a big way?
No, not necessarily
Not yet.
fintech. Not
Okay.
yet. But I think, so the nature of engagements and the business mix is pretty good. But that doesn't take away the fact that India is likely to be volatile. I don't mind it being volatile as long as it's a positive volatility, right? So we'll see how it plays. Second, I think I have said multiple times, we are at an inflection point as far as digital is concerned in the last few months, and I maintain that. In fact, I will strongly reinforce that, because we are seeing the transformative deals in terms of cloud coupled with application migration or going to a SaaS kind of platforms, or even manufacturing and B2B sectors trying to leverage not only cloud but Internet of Things, or retailers apart from doing a channel transformation and moving away from supply chain based retail to consumer analytics based retail. In addition to that, using technologies like IoT and analytics for getting supply chain visibility. So many such engagements we are seeing in our mix. So all of these things are clear indications that we are not talking small projects. We are talking really transformative projects in each sector. So absolutely I am bullish on digital, and digital will be the center stage. All our engagements will move towards digital, and whether it will happen next quarter or not, but I can tell you definitely this will be faster than everybody thinks.
Okay. But on that note, Chandra, I'm going to thank you. I know you have an analyst meet to go to. So thanks very much. And I think while our team helps you DMAC, I'm going to put one last question into Rajesh. Yeah, I know you have to go for the same analyst meet, but I'm going to put a quick last question into you. Are you happy with the way the numbers are shaping up? I asked Chandra this question, and it was, I think, what? Constant currency growth 3.1% versus 3.5%. Volume growth 3.4% versus 4.8%. BFSI growth at 1.7%, lower than earlier growth rates that you've done. Margins below the 26 to 28% band. As the group CFO, would you say this is a performance that you'd pat yourself on the back for?
It's a fantastic performance. It's a growth of $150 million.
Okay.
It's a cash generation of 5,870 crores.
What are you doing with all of that cash though, by the way? Because every quarter you talk about it and
We are distributing dividends of 5,400 crores this quarter.
Okay.
We come in with a margin of, which is an industry leading margin. We're growing in our best markets. So it's a fantastic performance.
All right, I'm going to leave it there. Thank you again, Rajesh, for joining us.